why don't we go ahead and do a little bit of a fundamental analysis on a couple of stocks. Take a look at Intel and AMD. These are two common companies that I bet you guys actually have one of these two companies. One of the biggest indications whether a company is going to do well or not, whether you should invest in it or not, is whether you've used it before, how much have you used it, whether you actually own a part of that or something from that company right now. Are you using it right now? Well, I was looking at two other companies earlier, Texas Instruments and Qualcomm, because they're also pretty high companies. The thing is, first of all, I don't even know what Qualcomm really does. Like, I know they have a stadium, and they're apparently the biggest company here in San Diego. But the thing is, I don't know who the fuck they are. I don't know what they do. I don't know what they sell. I don't know. And their company, you know, you look at the numbers, it's like, it's alright. So because of those kinds of things, we're going to cut them. Texas Instruments, I used to use them back in the day when I was in high school. I had a bunch of calculators with Texas Instruments. They were really good calculators. My favorite calculators, the best thing ever. So I thought maybe Texas Instruments is a good investment. But looking at their growth over the past 10 years, you can see that they're extremely stagnant. They just have not been growing. Their numbers just are not going up. So they have been having to sort of rely on internal measures to try to increase their profit margins, which has been working, and they've been getting a pretty decent profit from that endeavor. However, I mean, are you gonna buy a graphing calculator? Probably not. Maybe. The chances of you buying a graphing calculator, the chances of me buying a graphing calculator are really small. So that's probably why they haven't been growing. Nobody needs to buy graphing calculators, right? Maybe a few people every year. There's like always a consistent number who are going to be going to college every year. So those, or high school, whatever. There's always a consistent number of people every year who's going to need this. There's always the next class that's graduating into the next year. So the rates are going to be generally maybe growing with the population numbers or something like that. You know what I mean? So again, we have to cut this. Like, we don't use it. They're not doing like spectacular. So okay, so we're left with Intel and AMD. These two companies, I bet you use them consistently every single day. Right now, you're probably using one of these two companies. I am. I use AMD. And I like AMD a little more than Intel because generally AMD tends to be a bit cheaper. If we look at the actual price of the stock, AMD is twice the price of Intel. Now, we can't just base everything off of like the price of the stock, so let's not to worry too much about that. If we were to actually look at these stock charts, perhaps maybe we can just take a look at this here. Give me like a 5-year chart, or even better a 10-year chart, or even better a maximum. There you go. So, very interesting. We have growth, and we have essentially just basically stagnation here. But now, see, we're in recent years, so, you know, technology is becoming a little bit more important nowadays. Let's take a look at the chart. Let's get rid of this. Okay. Oh my god. Come on. Oh my god, I don't even know what's going on now. This is just such a shit website. Can you just please? Fucking hell. like they have two versions of their website. Anyway, let's go to the 10-year chart here, or actually better, the max. So I don't like that. See, I don't like it when a company peaks and then drops like that. It's just not good because it's likely to happen again. It's better if a company can just, sustain some growth. If that hadn't happened, that spike hadn't happened, and it just peaked like around here and it kept going, that would have been way better. But of course, maybe... Hi. Bye. Yeah, I love cars, airplanes, noise. Oh, so much pollution. I'm talking noise pollution here. Okay, so what do we got then? This company's on the up and up, as you can see. We're finding support up here, so that's pretty good. And if you notice, we had a little pullback here, so it's actually kind of in an ideal spot to be buying Intel on the chart. Look at this support area here. Nice. So this is actually a really good place. Look at that. It's like right here on the low part of this margin. It's like you bought it right here, or you bought it right here, and you go into the next platform up. See, we got the rising floors. Whoop, and then whoop, and then whoop. So we just need to get in here. We should probably get some Intel, to be honest. We should probably get a little bit of both. Maybe one of these and two of these. Just thinking about it. Now, let's go to the key ratios, because we want to see a little bit of information about this company, right? So we look at Intel, the growth over the sales has been increasing. Yes. Wow. So that's a little bit interesting. So who's got a bigger market cap? AMD or Intel? We got 100 billion. I think Intel has the bigger market cap. And 200 billion. So yeah, it's a little weird that the market cap here. Let's take a look at how many shares. Oh, they just have so many shares. That's why. And you look over here, they don't have that many shares. So that's why the price. That's why you kind of got to think about it. The price of a stock. You can't compare two stocks side by side and be like, what? This stock is cheaper than that stock, therefore I'm going to buy this stock because it's cheaper, or this stock because it's more expensive. You can't really compare it that way, because if you look, how many shares do these guys have? 4,500 shares, right? 4,500 shares, which means you're cutting your pizza slices so thin that every slice is going to be so small. So you can buy more shares, you're going to get the same amount of equity, or actually you're going to get less equity because of the market cap is bigger. So you're actually going to get a bigger equity by buying AMD, because even though the price is twice as much, look, the shares, they only have 1,000 shares, so you're going to get 1/1000th of the equity. So let's just do a simple calculator. Thanks, it's Texas Instruments. This is probably not even a Texas Instrument calculator. See? Now, if you have 1 divided by 1,000, I mean, you're getting like 0.1% of the equity in the company when you buy one share. Now, let's say you were going to buy 2 shares of Intel. So it's about the same price. But now you're dividing 2 into 4,500. So you... can we just like make it decimals? Like, how do you get 4 to the negative 4? Please. Take off the repeating. No way to do that. Stupid calculator. Oh my god. 2 divided by 45. Let's get an actual decimal number, please. There you go. Like, that's reasonable. 0.004. So now you're only getting like 0.05% of the company instead of 0.1. So you'd be getting a bigger equity in AMD. So now you gotta ask yourself, well, have they been growing? Well, the answer is kind of no. Look at that. Not really digging this sales growth rate. And remember when we were looking at the chart of AMD? It kind of stagnated a bit somewhere around there, didn't they? I don't know. Look at their gross margins, their operating margins. Their margins are kind of small here. Look at Intel's margins. I mean, those margins are really good. Yeah, they went down a tiny bit maybe, but they're pretty consistent there. The earnings per share, oh, they weren't growing and now they've started to grow a bit. The earnings per share here, I mean, that just looks garbage. It looks like AMD wasn't a very good investment before. I like how they don't have any dividends. And shut the fuck up. I don't like how Intel has a lot of dividends, but notice the payout ratio has been going down. So despite them increasing their dividends regularly, they're actually making so much more money that their payout ratio is going down, even though they're increasing their dividends. That is a good sign. They're buying back their shares pretty consistently. Don't worry about the book value, it doesn't really mean too much. The operating cash flow is good. Look at these numbers, it's just exploding. Their cap spending, they do spend a lot. They seem to spend quite a bit on capex. We're going to take a look at the capex over here. They don't spend very much on capex at all. But unfortunately, their operating cash flow, why is it so much? Why is the operating income so crap? Why is the gross margin so low? Why is the operating margin so low? What's wrong with the operating margin? Let's go figure out what's wrong with the operating margin. Let's go figure out what they're in. We gotta look at their income statement. Well, I suppose, yeah, the income statement will tell you. So this is how much they make in revenue. This is how much it costs to make the revenue. So this is their gross profit. This is where we get that 30% gross profit. It's not very good. So they spend a lot to make a lot to make their money. Let's take a look at Intel. And you could just see, basically, when you're comparing financial statements, it's very difficult to take one statement and look at it by itself and be like, well, this is a good statement or this is a bad statement. It's kind of difficult. You have to compare opportunities. You got to compare statements and see who's better at doing what. Then maybe you can make a better judgment. So the cost here, as you can see, is very low. So they're making, 60% profit margins compared to 30% profit margins here. Now, they have to do research and development, which seems to be a huge expense. Constantly researching and developing. That is cutting into their profits. These guys also, but they just make so much more money. It doesn't even matter. Like, look at, it's like nothing. It's nothing. This is like all the money it's like half the money that they made goes into research. These guys, like a quarter of the money goes into research. So they're still left with more. And then they've got sales and administration, and that's it. Like, that's it. Like, that's all their expenses. So now, and these guys also, but see, these guys are left with a total of this at the end of it all, and these guys are left with a total of this at the end of it all. So just think about it. Who's making a we would have to consider a return on assets, because their ability to generate income compared to their ability to generate income it might actually be that these guys are better at generating income, even though they're not making as much money. So let's just take a look at the return on assets here. So as you can see, the return on assets is very low. And we'll look over here at the return on assets. We see that the return on assets is much higher. Based on this conclusion, it looks like this is a no-brainer. Buy Intel. You're going to get a smaller share of the company, but you're also going to buy into a really good position here with Intel. I don't use Intel, so I am slightly about using Intel. But it just doesn't make sense to buy into AMD. It just doesn't make any sense. Like, their company's just not all that good. So let's take a look at the growth numbers, because I do believe that growth numbers are incredibly key. You notice how I'm looking at specific numbers, these specific chosen numbers that I want to look at. I don't really care too much about other stuff. So the growth numbers. Let's look at about a 3 to 5 year average on growth here. As you can see, we have some nice growth numbers, 5 to 10% consistent growth, over time. It's just nice. Here, we just don't have consistent growth. It's just not that good. Like, negative numbers and here they don't even have any numbers of growth here. This is no growth, nothing. They don't grow. Look at these numbers. I mean, at least they have some digits. Yeah, maybe like 1 or 2 years was a little bit negative, but most of the time they've been growing 5-10% in operating income, and net income they've been okay. Here's a little bit where they haven't been growing here and there, but these three aren't really even as important. It's mostly like the revenue. This number is important because this number tells you like how many sales they're in growing by. Like, these guys are growing by 5 to 10% in sales every year, right? These guys are not growing by 5 to 10% in sales every year. They're just not really growing that much in sales. So as you can see, they're not really growing all that much in sales up here, but these guys are growing this much in sales every year. So that's where you get this number. Now the EPS is also important because that's going to basically tell you how much you're earning as being a shareholder. How much are you earning per share? That's a pretty important number. So the earning per share over here, let's look at the 3 to 10 year averages. And I mean, we see some decent growth numbers. We see like a negative year, small numbers here, but there's 10-15% of growth sometimes. They grow reasonably. Like, it's alright. It's not that bad. It's not bad. Like, it's not great, but it's not like the worst thing I've ever seen. That is the worst thing I've ever seen. It's just no growth. You look at the EPS, earnings per share. Do you see any growth here? I don't see any growth. I see them making more money per share 10 years ago than they are today. I see them making negative earnings per share during all this time. So what makes them so special today that would make me want to invest in them when they're at a super high peak in their price? That doesn't make any sense. Intel, the earnings per share. I mean, they weren't really growing from here to there, but at least they were consistent. And now they're making a little bit more here. I don't know. It's kind of like, what do you foresee in the future? Do you think we're going to become a more technical age? Probably. We take a look at cap spending. So once they've finally spent all, this is sort of what's left after their business expenses, right? So after all, they've paid off their stuff and they get that and whatever, and here they've got their operating cash flow. This is how much they make in their business. As you could see, AMD does not really make all that much in their business, but Intel does. Now, they do have to spend on CapEx. They gotta, like, you gotta buy plant and equipment and a whole bunch of gear and shit, So this is what they would spend on, like, gear. Think of it like car, if you buy car or gas or some stuff. I don't know, you gotta think of this like the gas of the company, right? Like CapEx, that's buying gas. So your company runs on gas. Your company runs on your CapEx. So you gotta try to keep that cost of your gas kind of small. You want small cost. So we've got a pretty decent margin here. This is about a 60%, about a 60% margin here. So that's actually really nice. So the free cash flow, as you can see, the free cash flow, that is the number that you really care more about almost any other number, is the free cash flow. Because the free cash flow tells you, once every single expense of the business is done, what's left in the owner's hand so that they can start investing. Investing is different than spending. So they've got three different layers of expenses. The first layer of expenses is how much does it cost to run the business. So that's kind of like the cost to run the business. Then you have how much is the gas? That's the CapEx. How much does it cost to basically recharge the business? Okay, one is to run the business, just you deduct expenses and stuff. But the other one's now you gotta charge the business. You gotta give it a battery. So that's the CapEx. And then there's the investing. Where does the money go once you're done? Once you've finally paid off everything that needs to be paid, what can you do with what's left over? We're going to take a look at the free cash flow of both companies here. And as you can see, we just don't have any free cash flow here. So this company is not at a leisure to grow. They can't do anything. They don't have any money left to invest. They cannot invest. They do not have any possibility to invest in any kind of investment opportunity. It's not going to happen. Maybe very, very small. So what we're now going to do is see if I'm correct. We're going to go see if the financials, if these guys are investing in stuff. So we're going to look at the cash flow statement here. It's going to tell us what's going on. So over here, this is basically the CapEx. This is their quote-unquote investments. Now this investments piece should be a whole bunch of negatives, but as you can see here, it says acquisitions net. It seems like they sold something, so that's not an expense. That's a gain. That's not good. So this is their CapEx. I don't know. They have nothing here. Like I said, they have small little investments that they're making here and there, and they're kind of maturing them. So they're basically paying for themselves. They get the investment, they put it back into investments. They get the investment, they put it back into investment. They get the investment, they put it back into investment. That's it. That's all they can invest because they have no cash flow. They have no opportunity to invest. They have no cash flow. They can't grow. If you are investing in AMD right now, just understand these guys have no money to invest. They can't grow. There's nothing they can do. They're just stagnant. Okay, look at the free cash flow. So where's the cash going? Well, it looks like they're actually pocketing the cash right there. Is that right? Let's go to the balance sheet and let's see. So now let's take a look over here and let's see what they're doing in terms of investments. Didn't I tell you that this whole section should be negative? And in fact, Intel makes a bunch of investments. First of all, here's the CapEx. Okay, but then look, they're also making acquisitions. They're buying other companies. They're buying other like types of products or names or services. Here they sold a couple. Okay, so but and here look how many investments they're making. They're making so many investments. Of course, they're basically doing the exact same thing here. They're putting the investments, taking it out. They're putting the investments, taking it out. But look, at least they're making acquisitions and they're making other types of investments. They have so much money to invest because when you look at the free cash flow, look at how much they have to invest. And then look, the free cash flow, where do you think that's going? Look in the purchases of investments here. Right? Isn't that almost the same? Whoop. Look at that. 13,000. Look at that. 10,000. 12,000. Well, it's going as part of that. It's going into there. Actually, I'm lying. I think this is where they're getting that money. Look, so they get it this year, they put it in there. They get it this year, they put it in there. They get it this year, they put it in there. They get it this year, they put it in there. Maybe I'm wrong. I don't know. I don't know when this stuff happens. No freaking clue. But the point is that, you know, these guys are investing a lot. They're making acquisitions, and you know they're paying off they're buying their stocks back. So that's really nice. Like they're actually putting a lot into buying back their stocks. I think that they really want to first of all lower the let's see if lower the amount of shares they have. I mean, well, these guys, what? Oh, this is the wrong piece. Yeah, so let's take a look at the total cash. They seem to be basically just pocketing the cash. They're not really doing too much with it. But what about these guys? I mean, I'm not really, I don't really care. Good, they have cash. But look, these guys are not pocketing the cash. They're just spending the cash on stuff. So that's good. I mean, you don't really need cash. Cash doesn't do anything. So, okay, cash end of period. Just trying to see if this stuff makes any sense. What were we talking about? Well, yeah, the common stock are purchased. Look how much they're purchasing back. And how much are these guys common stock purchased? Do you notice? They don't have any. They're not buying back their stocks. How? Yeah. So, I mean, I think this is absolutely a complete no-brainer. So what I'm gonna do right now is I'm going to delete AMD from my list. I think. I think it might be a good idea. Let's take a look at some charts. This is pretty much all we need. Let's think a little bit about the PE ratios for a moment here. And we'll consider our growth numbers. So what we need to do is to come up with some sort of a consensus on how much growth per year that these guys might be growing at. Can we come up with some kind of consensus here just based on these numbers? Let's go with maybe the 10-year numbers. We see about a 5 to 10% growth in EPS per year, maybe. So future value calculator. I think this is what we need here. So the number of periods of 10, the starting amount. Right now the EPS is about $5. Now I think this is a little bit inflated. Well, let's call the interest rate 5%. Periodic deposits are nothing. Let's calculate this. 0. So it looks like in 10 years, you know, their EPS might be about 8 if they have a consistent growth of about 5%. If it was 10%, then we would be seeing growth of around 12. So anything between 8 to 13, 8, 9, 10, something like that, maybe even 10 years. So what we can do now is we take a look at the valuation of the company here. So keep that in mind. So in about 10 years, they should have about 9 to 10 of earnings per share. Okay, 9 and 10. Let's just say 10 for the sake of being easy. So $10 of earnings per share in 10 years is what we would kind of expect Intel, hopefully, to be able to yield. Now, we need to look at the price over earnings, the PE ratio, and we want to get an average number over the past 10 years of what's the typical PE ratio of this stock. You see, it's about 10 to 15. Okay, 10 to 15. 10 on the low side, 15 on the high side. Now, if in 10 years the PE was 10, then we would expect the stock to be 10 times 10, $100. 10 PE, or 10 earning per share, $10 of earnings, with a PE of 10. 10 times 10 is 100. We would expect the stock to be worth $100 in 10 years. And that's going to give us about a double, okay, because the price is now $50. So we would expect this stock to double in price in 10 years. Okay. Now, for AMD, we can do the same type of calculation. However, we're going to need a growth number. But we don't have any growth. We can't predict any type of growth for this company. How can we predict it? Look, there's no earnings per share. It's like there's no growth. What are we gonna do about that? Okay, so let's just say maybe 50 cents. We would expect in 10 years that the EPS should be about 50 cents. Anywhere from negative 50 to 50. Because that seems to be what this has been doing, anywhere from negative 50 cents to about 50 cents. Here was really far down. It was negative 50 cents, negative 50 cents, 0, 50 cents, 50 cents, 50 cents. Yeah. Okay, let's take a look at the valuation. We're going to take a look at the PE ratio of this company. Look at the PE ratio. It's like not even, there's no consistency. It's like there's no PE here. That means they didn't have any earnings, by the way. So now they're making a ridiculous amount. All of a sudden. Just like that. I mean, come on. Oh, actually, they're not making a ridiculous amount all of a sudden. What this means is all of a sudden the price shot up like crazy. That's what it means. And the earnings are still about the same. So it's not like the company's gotten better. Okay, the company's a piece of crap. But because everybody's investing in technology stocks, they probably think, hey, AMD, let's get some AMD, plus it's cheap. Actually, it's not cheap. It's expensive. Plus, it's expensive, so let's buy some AMD. They're probably looking at Intel and being like, Intel's cheap. It's only $50. AMD is more expensive. I'm going to buy AMD because it's going up. You know what I mean? So nobody understands how this really works. Now, what do you think that this is going to yield in 10 years? With basically the average PE is, I don't know, 0. There's no possible way to predict this. There's no possible way. I can't give you any type of valuation. I don't know. I would say 50 cents in 10 years. So with that in mind, 50 cents times what? Let's just give it a PE. 0. I would assume that the price of the stock is going to be 0. Okay, fine. Let's give it a PE of something reasonable. 20. Alright, let's give it a PE of 20 in 10 years. 20 times 50 cents. That's how much the stock is going to be worth. $10. That's how much the stock is going to be worth in 10 years. $10. That's how much I think it's going to be worth. So we're going to look at the graph. and we look at the 5-year chart, and I mean, yeah, let's look at the 5-year chart. I'll tell you why it says $10. You know, if I get these valuations just by, I get this valuation just by looking at the just by looking at these numbers. And if we look over here at the chart, I don't think that chart worked, right? God, why do we have to do this? Oh, that was nice. So let's look at the 10-year chart. This one I said was going to be worth about $100 in 10 years. That makes sense. So look, 10 years ago it was 15. Then it became 30. Then it got to 60. So every 5 years it seems to be doubling. Doubled up every 5 years. It seems to be a little bit faster than what I was thinking. And we're at the low side here, on the low end of this range. So buying AMD, buying Intel right now would be a chef's kiss. Let's go to this 10-year. Remember I told you that this stock would be worth $10 in 10 years? Well, 10 years ago, the stock was worth $10. 5 years ago, the stock was worth $2. A few years ago, the stock was worth $10. You see? $10. $10, $10, $10, $2. $10, $10, $10, $10. All of a sudden, people started to invest in technology. But AMD's not doing that great. So AMD's not the company you want to be investing in. Let's look at the max time frame here. $10, $5, $5, $10, 50, 20, $10, $10. Okay, here's a little spike. It went to like 20, 30, 40. Okay, $10, $10, $10, $10, $10, $10. This stock, this company is worth $10. Do you not see how this works? You look at how the company makes money, and look at that. It's worth $10. It's worth $10. Okay, here it was worth $5. $10, $10, a couple bucks, $5, $10, $10, $10, $10. Ooh, people thought it was worth $40 at this point. Nope, it's not worth. It's worth $10, $10, $10. People thought this was worth 40. Nope, it's not worth that much. It's worth $10. It's worth $10. It's worth $10. It's consistently proving to be worth $10 with a PE ratio of about 20, which is high in my opinion. So PE ratio of 20 with an earnings per share 50 cents, negative 50 to 50. Come on, man. Like, how are you gonna make any? You can't. This is worth $10. So right now people are freaking. Oh, it's worth $80. It's not worth $80. It's worth $10. Next year it's gonna be $10 again. This company, on the other hand, they've consistently been growing. Let's look at the max chart. Data analytical. Full chart. Now, so yeah, so this company here, let's ignore this peak, because like I said, sometimes the market just tends to do weird shit. Like, it just does that. So this one's been growing. It was 15. It was a little bit stagnant, as we saw from the growth of the company. But I mean, it's been generally, if you've been buying the lows, that would be good. You generally want to be buying lows in an uptrend, in a good company. Buy your lows. Don't buy highs, buy the lows. So look, right now we're at a low. Everything is pointing to buy. So this is how we do fundamental analysis. Like, there's really even no point to go even further than this, just based on what we've seen in fundamentals. If at this point, there's sort of two things you want to be taking a look at, maybe three. One thing would be maybe the general, like, research the company itself. Try to take a look at their past history, like who's owning it, what their plans are. Intel. Basically just read the wiki page. Well, let's read the wiki page of Intel Corp. And yeah. Okay. So, I mean, they're the inventor of the 86 processor, so that's pretty cool. But what are they doing right now that's making them like so strong? Dell, Lenovo, and HP. I don't even use Dell or Lenovo or HP, but I have. And it doesn't matter. Right now I'm using Scepter and Acer. Whatever. Other people have it. It's not like it's a problem. Major competitors. NVIDIA. Alright. So AMD is the only competitor. AMD might go bankrupt. How much I mean, how much do they got? How much working capital do they have? They have a couple $billion. This kind of tells you whether the company is in green or not. They've got a couple $billion chilling there, so they're doing okay. Let's take a look at the inside. That's not what we need. How about the ownership? Yeah, there we go. So they actually, so like I said, they have a lot of equity. They don't have a lot of debt. So that's good for AMD. We're going to do to take the ownership. Yeah. These guys also have a very good equity to debt, right? I would imagine so, based on their working capital. No. Come on. Let's go back to the wiki page. Dang, this is actually a really long video. I'm sorry. I thought it was really short. Been sitting here for 45 minutes doing this? Unbelievable. Acquisition table. Like, look at how many companies these guys have been acquiring. That's pretty good. This is kind of like when you're on a team, you're looking at what players they bought, right? Who did they just recruit for their team? I don't know any of these companies. Pentium flaw. Board of directors. Employment. Here we go. Intel Inside. Premium Pentium Intel Inside. I mean, that's like the most famous computer thing you've ever seen. Intel Inside. So I think I want to buy some Intel here. Okay. Just about does it. I mean, look at their equity to debt. The cost is cheap. This is a really good company to be buying right now. The only other thing we could do now is maybe look up the customer reviews. So Intel versus AMD, and see who likes what. So that's what I'm saying. Like, AMD gives you good money once you get outside entry level chips. Intel CPUs are still the best bet. Wow. So the reason I like AMD is because it's cheap. You can get a really good quality for cheap. Unfortunately, Intel costs a lot, but they're gonna give you a really good gear, much better gear. So this is just a short little article. Can we go back? Battle of the processors. There's only 2 choices. In fact, it's a blowout win in AMD's favor. Wow. Yeah, I mean, I have the Ryzen 5. Intel looks a little cheaper. I mean, they're both so close. It really. Look, the core, the eye is higher. The eyes are much higher. What is this? The eyes are much higher. Yeah, I've always bought AMD. I never go with Intel. I mean, it's just such a close battle, but for right now, it makes more sense that Intel is gonna probably come through eventually. They're gonna realize that what is AMD so good? They're gonna try to figure it out. They got more money, so. Maybe we'll take another look here and see Intel versus AMD. Who's better? Intel's top mouse doesn't really matter, I guess. So the best idea would be, I don't know, maybe buying both if you wanted to, but just keep in mind that when you buy highs, we can look at the price now. Let's look at trading. Let's look at some actual. Let's look at some actual stock, some levels. We'll take a look at the technical analysis here at this point. We're going to look at Intel. We're going to look at the monthly. Actually, we'll do weekly. So looking at the weekly chart here. Intel. What? What is this? Okay, I guess we could look at the daily. No biggie. Yeah, let's just look at the daily there. So, we got lows, we got a low point. This is good, man. Yeah, I like this. I like that a lot. It's a really good place to buy here. It's like, duh. And if we look at AMD, this is why I think we should probably not be buying AMD. I don't know. I mean, it's at the high of this range. It's gonna come back down to $1. Look at that. Look at that. It's just been ranging in here. So you think it's gonna break out further than that? Probably not. It's probably just gonna keep ranging here, up and down here. Right? About that. It might actually start ranging higher. It's possible that this might actually go up. We don't know. I don't know. Ain't got no clue, man. Let's take a look at this. That's not a promising chart. It's not a promising chart. But when we go back to int, we look at a monthly. Looking at a monthly. We're looking at a monthly. See, that is a little bit more promising. This looks like it's holding support around here. It looks like it might want to range here and there a bit more, doesn't it? And that's why I said it doesn't look so good having that spike up there. If that spike had not happened, right? Remember when I was telling you, if that spike hadn't happened, and if the price had just stopped around here, right? Just imagine that. If the price had stopped here, we'd be breaking new highs, right? And then we would know, oh, this is a really good company, or a really good chart. Of course, the price can do whatever the fuck it wants to. It's not like. But this one here, it's very clear that it's gonna start doing more of this. That's pointing up. That's really pointing up. It's hard. Trading's hard. So anyway, we're gonna go ahead and get some intel. And if AMD gives us a little pullback or something, maybe if it was at $1, a couple dollars, that would be a good investment. Maybe if this one was more like $30, that would even be a better investment over here. That would be really juicy if it was down here. But you know what? Look at the volume. Look at how low the volume is. If the volume is already at a low point here, that kind of means, and it's finding support around there, and it's going up here, and it kind of feels like this is going to be starting to take off a little bit more here. And I do believe that Intel is the correct choice of investment out of all of these little factors that we have. You never really have a perfect company. You gotta understand that. But just realize that according to our valuation, if this company continues to grow at about 5 to 10%, we should expect the stock to be about $100 within 10 years or so, maybe even 150, depending on whether they're pretty good or not. This stock over here, so we're gonna get it maybe a double or triple our investment, right? But over here, you know, I feel like this is worth $10, so you know, I feel like we're gonna lose money if we invest in this one. See what I mean? So that just about does it for this video. We're gonna go ahead and grab some intel.